Thank you for joining iMeet. When you hear the tone, you will be the 21st person to join the meeting. The meeting is now being recorded.
Hey everybody, good afternoon. This is David Blake with Tuesday Tech Talk. Missed you all last week. Today we're going to quickly go over the what happened last week and look at a couple of the indexes. And today we're going to talk about planes, trains, and trucks, and go over some stocks maybe in the transportation index that we might be able to make you some money with. If this is your first time here, we usually talk about 20-25 minutes, then we open it up to questions on either what we're talking about, or if you have anything about sectors or individual stocks, you can do that also. But let's jump right into it real quickly since we missed last week. Okay. First off, we're going to look at the Dow Jones. We finally had a breakout to a new high last Thursday and Friday. It was a good week all around for the market. The Dow was up 126 points, or just over 0.5%. S&P 500 added a 1%. NASDAQ jumped 95 points, 1.5%. And we had good strength in the biotechs and the semis again. And the Russell 2000, which has also been a laggard, was up 23 points, up 1.7%. So some good things coming down the road here. With the CTI eased a couple points. We're at +5. That will go to +4 at the end of this week. And we're projected to look at possibly going to a bearish call in the market the last week of June. Momentum index was unchanged. We're neutral, +2. Sentiment index is also neutral. But last week we ended up with the Dow, the S&P, the NASDAQ, the NYSE, the Dow Jones Utility Index all making new highs. But we're lucky enough that we got the some action in the transports and the Russell 2000 to come back. Now this week hasn't been the best week for the Russell 2000, which we'll look at, but the transportation index so far is holding up pretty well. Actually, was going to do this talk on the transports last week, but I don't usually go into it the Tuesday after a Monday holiday. But anyway, here we go. We can see this the old high from March 1st broke above that. Yesterday we came, and today we're kind of bouncing off of that breakout range. Good accumulation over here. The indicators are all bullish. No negative divergence on the Dow. Here's the market at a glance chart for the advanced decline line. Again, making a series of new highs all the way through here. Yesterday wasn't the best day, but today we're a little bit bearish on this stuff too. But I think a lot of this action today is going to be this week's going to be a little bit soft because you have the ECB meeting over in the Eurozone either Thursday or Friday. And then I think some investors may be a little bit cautious ahead of the vote over in England. But this is what you want to see. This NYSE AD line usually will peak out about 3 or 4 months before the actual market peaks out. So this is telling you we still have higher prices ahead of us. Okay, and here's also we're seeing some nice expansion in the new high, new low list. We got about 350, 339 on Friday for the Dow or for the NYSE. That shows good expansion. It means more stocks are participating in the rally towards new highs. In fact, I think as of yesterday, I think about 28% of the stocks on the NYSE or S&P 500 are within 1% of making new highs. That's strong. That's what we want to see. You don't want to see that number going down. That's been expanding also. It was about 16% over in here about a month or so ago, 2 months ago. And now we're up to, like I say, about 28% of the stocks within 1% of making a new high. Okay, here's the S&P 500. We broke out the week before, gapped up, held that gap, came down one day last week and kind of filled the gap, which is nice to see. And then we took off right after that. Holding up above all the moving averages, a nice trend line going up. Here was the ascending triangle that we broke through. Positive divergence, positive momentum in all the different indicators. And again, Nice accumulation on the S&P 500 breaking out. Here's the NASDAQ still going up and down that upward channel. We might get up here to this thing here. We could maybe possibly see a little bit of softness over the next week or so, or maybe even this week, again, as we head into these two events over in Europe. But nothing that I see in here that I would worry about as far as negative divergence coming up on this chart either. Good accumulation, looks fine. Here's our market at a glance AD line. Someone asked the other day, said that these are negative numbers. Why is that bullish? Well, what you look at the slope and the direction of the advanced decline line, not the total numbers. Because in the NASDAQ, you had there's a lot of junk stocks that they go out of business, that type of thing, go off the exchange. And over the years, the thing has had a negative bias, unlike the NYSE. But again, we're making higher highs on this thing. I'd like to see this go up here and take out this high would be strong. This is where we made the new high, where the Dow was making the new high with the NASDAQ back in March. But again, you're seeing expansion in the NASDAQ also of the number of stocks participating. The NASDAQ had a 344 new highs back last week on Friday. Pulled back a little bit yesterday, but again, this expansion in the number of stocks making new highs is what we want to see, and that is bullish for the NASDAQ going forward. Today, we're kind of spinning the wheels like we were yesterday in this tight range. We'll see if what we can get to propel us a little higher. Okay, now here's I want to look at two more indexes here. The first one is the Russell 2000 Small Cap Index. You can see this support line that's been going across since basically since about early December, actually, maybe mid-November. Once it made this big run, it's been kind of going. Now, what I want to see is I want to see this thing take out this resistance level around 1405, 1410, and push that higher. If it doesn't, then it kind of goes sideways here, and then we start to come back down to this. You may be, I don't want to be stretching it, but sometimes you look at these things. You might have like a little bit of a head and shoulders. Here's a shoulder, there's a little bit of a head, here's another shoulder. If it comes down and breaks this neckline, that would probably be a signal that we could be having some problems, because that would also take out the 50 and 100-day moving average. So just something to watch. You want to keep this thing above 13, right around, as long as it stays above 1380, we're in good shape. And today, right now, we're trading at about 1391. So you don't want to see too much more deterioration in this Russell. But the indicators here are kind of flat. You're not seeing a lot of upward momentum at all. It was nice to see this last week take a nice run. I think one day it was up like 1.5%, which was good. But we got to have a little bit of follow through on that. And here's the other one we talk about a lot. Oh, actually, before I go into that, now here's the NASDAQ Biotech ETF, IBB. We talk about this a lot, where you have this $300 range where we want to see that get through. The actual resistance now is around 290. It's 290 something and change. We had a nice move in this last week. Currently, we're at 292, down $1.50. But this thing keeps butting up along here. We're getting a little bit. It's still kind of neutral, but you are having some more accumulation. I do think this is probably going to break through this 295 up to the 300 area and make a run. I think that would be positive for the broader market, and that could add the support to the Russell 2000 to have that punch through to a new high and join the rest of the indexes. Here's the semiconductor index. Again, this is a long upward channel starting last November. Just keeps on moving higher highs, higher lows, good accumulation. It's overbought, to say the least, and you are at the upper end of this little top of the channel. So you could have a little bit of sideways motion in this thing, which would help it work off its overbought condition. But nothing on this chart that's worrisome besides being overbought. And most of the time when stocks are overbought, they're overbought for a reason, and that's because everyone's plowing money into them because the good things are going on. AMD's going again. NVIDIA's going on. That Cypress seems to be breaking out a little bit on semiconductor. A lot of different semiconductors. I could go into a lot of names on that we could look at, but I would rather look on pullbacks on the semis. I wouldn't be adding much at this point. All right, now here's the Dow Jones Transportation Index, which we've talked about and complained about for months. we started making some lower lows and lower highs over here, and we finally got a big bounce off of this, off the 200-day moving average here about 2.5 weeks ago. It touched right on there and bounced right off. We took off, broke above the 50 and the 100, and we ran the resistance up here and off the pivot point at 93.28, something like that. Now we've got to get up here to this 94, 95, and see if we can break above this area up here. That would be bullish. I like the the positive divergence here in the indicators. Moving a little bit higher is not great momentum, but we'll take it because we've had a lot of one of the things about the Dow theory is what you want to see is that when the transports will confirm the new high. Dow theorists would like to see that. The reason the Dow theory exists is because especially back in the 30s, 20s, 30s, and 40s, when the companies were making goods, they had to ship them to get them sold. Whether it's trucks, trains, or whatever, whether it was coal or iron ore or something. I don't think it's as important anymore as it was back then. You do want to see the transports move, but we've become such a service-oriented society that it doesn't quite have the weight that it used to. However, when you do, anytime you get a confirming indicator or index on a market move, you take it. And again, if this thing can pop up here around 94.50, that would be a nice move. And we're right around this 9,300 right now, right over in here. So, right in here we are right now. So again, this can go sideways a little bit. See some positive divergence, some accumulation back down in here, and we'd like to see this thing break out. All right. So anyway, we're going to look at some transportation stocks in here. I think this is a place where we can make some money going forward. These aren't semiconductor type of returns, but when you have the semiconductors pushing the new highs and maybe some, the biotechs I would still be looking at. We can look at that in a week or two. But I think that when you have a laggard like this in the Russell 2000, if we can go into a market that's making new highs and come in here and find the stocks that are starting to outperform the broader market, that would be a place for us to add to some new positions, and we could add to some of the other ones on pullbacks. So what I want to do first is what I always tell you to do. Okay, we're going to look at an area in the market. Let's go to the industry group analysis, and let's see what industries in that sector, and in this case is the sectors of transports, what sectors might be outperforming the broader market. So you'll pull up this thing, you go over here to relative strength and industry group analysis, click on that, and it'll rank them by the strongest industries down to the weakest. Now down here at number 5, we come into where are we? Airlines. Right in here. Okay, we got airlines coming in at number 5. So you can click on that. It'll give you a list of the strongest stocks in that. If you go a little bit lower on here, we run into let's see, the railroads coming in here, and we also have air, freighter, and couriers down here. And not looking so well and lagging is trucking, but I do think you probably have a bottom in the trucking industry. You've had a nice bounce off of that in the last week or so, and we can look at some stocks in that. So we're going to look at the airline stocks first. Here's the S&P 500, and here's the airline industry with our own chart. You can see some stocks in here that we might want to take a look at. First thing, the strongest one here is a company called Ryanair Holdings. It's an Irish company that has had a heck of a run. Also, you see UAL and American Airlines in here also. Southwest is probably the best looking chart. We'll take a look at a couple of these individually real quickly. Here's UAL. The reason I'm not showing their Ryanair is because the thing's gone from like 100 to 150 recently. I would only probably look at that in a pullback. But here's UAL. We had a little opportunity here where they started dragging passengers off the train to upset some investors. And we have this rising ascending trend line. Had that resistance going across here. We broke above it. This is called polarity. When old resistance becomes support, they call this line a polarity line. And this is what you want to see is after the breakout, come down here and test that resistance area. It now becomes support, and then we move higher off of that. The indicators look good. You have nice accumulation in United Airlines up here around 81.32. I think you can move higher to this thing, and probably it's at 81 right now. Resistance up here, next one is about 89 on some of the measured moves. So you can get probably a 7, 8, 9% move in United Airlines. American Airlines also looks good. Okay, you had this descending, little bit of a descending trend line over here. You bumped into it here, you bumped into it here, bounced off, came down to the 100-day moving average, and you bounced off of that. You're breaking out to new highs over here, and now you have the 50-day moving average coming across, crossing above the 100-day moving average, which is also bullish. Momentum is gaining strength over here. Good accumulation off of this. Now you see we're going sideways here. You had the AD line on the smart chart on our new package and stuff. You want to look at the 50-day the up-down slope, and it's the direction of the slope, not the number, that's important to me. If it's under 1, I want to see the slope rising. So again, you have the support off of this thing where it bounced off the 200-day, bounced off the 100-day. Now the 50 is going to be the next support level. I think you can get a nice trade on AAL on this thing. Next one we have over here. I like this chart a little bit better. Here you have Southwest Airlines, LUV. Again, you rolled over here with the problems with United Airlines. They had the little things, came up here, bounced into the support again. You have your polarity line now. You broke above that. The pivot point was 59.03. You're breaking above here. You could probably get a trade into this thing up to around 64 off Southwest Airlines. Again, you got the MACD is looking higher. Good positive momentum on the 14-day RSI. My 30-day stochastic, it's above 80. I like that. When it gets to about 99, a little bit overbought, but I think you can move higher. This I'd like to see a little bit more of an uptick. We're kind of neutral as far as the accumulation goes on it, but if you start to see this move higher, that would be a good sign. So that's a couple of airline stocks that I like. Some of the other ones, the smaller ones like Alaska Air and SkyWest, I didn't put the charts up because last year they outperformed, but this year they're kind of lagging the bigger airlines. So I think maybe we could stick with those, and if I was going to choose one of those, it might be Southwest. All right, this is the next strongest sector in the or industry in the transportation. We have railroads. So you can see it's a pretty nice looking chart. We have it's going along with the S&P 500 over the last over the last week. Railroads are up 1.36%. Over the last month, they're up about 4.5%. So I think we have some good buys in here. First one we want to look at is CSX Core. Again, you're breaking out to new highs. One thing that's kind of interesting on this thing is I noticed that you keep going sideways for about 6 weeks, boom, you break out. Okay, you can start going sideways for a while, boom, you break above that. Again, you go sideways, boom, you break above that. It just kind of keeps stair-stepping higher, which to me means it looks good. You have this ascending trend line, which is a positive. You're above the pivot point. Momentum is still positive. The accumulation is a little bit flat, but I see a little bit of an uptick on this. I'd like to see a little bit more accumulation in CSX, but I think as the transports do go ahead and start to outperform like they did the last couple of weeks, you can see that thing turn up. So CSX could be bought in here. All these railroad tracks stocks pay about they're about 1.5% dividend if you're looking for some dividend growth. All right, here's KSU. This is Kansas City Southern. A lot of positive things going on with the indicators here. We get positive divergence here. You have a nice positive momentum. The 30-day stochastic is up above 80, looking good. Here's the accumulation line down here. Good accumulation on this thing as we're kind of going sideways. Some people could look at maybe a little bit of a head and shoulders in this thing, reverse head and shoulders to a breakout, which would get you up here with this 90 plus area. I think we're around 80 or 93, 95, 96. Anyway, I think this thing here could probably go up. You should be able to retrace this whole amount from this thing here for the Fibonacci. We do a whole retracement back. We've already done 50 and 68%. I think usually when you break through this one here, you're going to get a retracement of the whole move down, which I think you'll get, and then we can see if we're going to break out the new highs. This down here and this over here is telling me that we will break out the new highs on Kansas City, so that might be one you can look at. And now here's one CP. CP, this is Canadian Pacific. again, we had this run into some resistance along here. We finally broke out of it, came down, tested the 50-day, bounced across it. Now we're back here bouncing across this polarity line and also around the pivot line. Not as much, not as good looking a chart to me. In fact, here you can see the cumulative, we're still under a little bit of distribution. The 30-day stochastic made a lower high over here. The momentum just is staying positive, but we look a little bit ready to go under 50, and the MACD histogram looks a little bit lower to me. So this I would be a little bit cautious, although if it does break through 162, which is up here, you're going to break through a double top point and figure breakout. So if I was going to look at this at all and want to buy it, I would want to see the break above 162 here when to get to the point and figure. Now that's another thing I looked before. We've talked about before. When you look at some of these industry groups, if you go to the point and figure breakout and point and figure early alert, and you pull up that list, you'll see you want to look to see if any of these stocks that we're talking about today or in those industries are close to making a point and figure breakout, double top, triple top, or if they're showing up on the early alerts. That means not only are these stocks looking good, but they're also all at the same time they're all starting to break out, and that's what we're going to see. There's several of these transportation stocks that were breaking out to new highs. But Canadian Pacific, again, if you're going to look at this thing as a buy, you'd want to see it trade up here above 162, and that would be the point and figure breakout on that. Here's another one that looks kind of interesting. Looks like a bottom may be in, possibly. This is GWRs, Genesee and Wyoming, smaller railroad stock. You can see it was in a descending channel. It came up here from back here where it fell back in July. It made a new high out there in December. You retraced 68% of that. Now you're up here bouncing across the 50% retracement. If you can get above the 67 and make a run back up to these moving averages up here, the 100 and the 200-day moving average, you can get a nice trade out. What I want to see on this thing, though, this is some positive divergence, and this is positive divergence. I would like to see this start to break out. And again, you can draw these trend lines on indicators, especially on ratio charts or this accumulation distribution. When you see this thing break above this descending trend line, and these indicators also will show support and resistance that when they break above the indicators, that's also a good buy signal. I'd like to see this start to pick up a little bit more before I would go into it and break above this 50%. But for a smaller stock, that might be one to take a look at. Finally, we have the Union Pacific, UNP. Let's see. Okay, this chart looks okay. Again, you're up, kind of a nice little upward channel. You're bouncing off the bottom part over here. You're above the 50-day moving averages. But this is when we talk about positive and negative divergence. This is negative divergence. You don't quite have the accumulation where you're to break out to new highs. Momentum has slowed to the point where you may go below 50 here. The 30-day stochastic looks like it may roll over and go below 50, which would indicate you don't want to go in that one. So I would be a little bit cautious on this stock. If it breaks above right here around 114, it's going to show up as a double top point and figure breakout. So as long as this thing's trading around this thing, I'm going to let it go. If we can get above, break out to a new high, that would mean you'd probably see some improvement in these indicators. Right now, UNP, I'm going to leave on the sidelines. So we'll forget about that one. But there were a couple ideas there for the railroad stocks. All right, now one that's underperforming that may have bottomed. This is the trucking industry. It's had a horrible couple of months over here, but you can see over here back at this area, it's right where it came down to, and now we've bounced off that same area, which that's resistance, I guess, and now we're getting some support. So if we come in here, it's not one of my favorite areas, but there are a couple stocks that I wanted to point out that I do kind of like. The first one is Old Dominion Freight Line. The symbol is ODFL, you can see up here. Again, a little bit of a reverse head and shoulders, which is a continuation pattern. That's at $92. This thing's going to break out, above up to a double top point and figure breakout on our stuff. If this is the neckline for this thing here, it's already broken that, and that would probably give you a trade up to about somewhere probably around $98, $99. Note on this one, ODFL, Bank of America Merrill Lynch upgraded this today to to neutral. But I like the positive divergence going on in this thing. I think if you want to look at some trucking stocks, this might be one to look at. Another one that looks okay to me, might be trying to break out. This is Werner Enterprises, WERN. You're coming up here to this area here where you get the resistance going back to December. If we can get a higher low. You got some positive divergence again in the indicators, except I don't like this. However, if this can break through on this thing as we're starting to break out, again, that would break through that resistance on the accumulation distribution. I wouldn't be knocking the doors down to buy this thing, but if you're looking for a low-priced trucking stock, this thing can get up here around 29. You might be able to buy a breakout on that thing. Another one, the last one we're going to look at, the trucks. This one's called Swift Transportation Company. You see a lot of these trucks on the road down here in the southeast. Again, here's a kind of coming out of a little bit of a triangle or pennant formation. Good positive divergence on these indicators. It's been up here. It hit this thing, bounced back to the support levels of the 100-day moving average, bounced off of that, took off back above the pivot line, and now we're bumping heads against this descending trend line. And if this thing breaks through right here, and I think it will, Swift would be a stock. This would be my favorite one in the trucking stocks. I think you could get a nice trade out of this thing here because the positive divergence looks good, and this thing is an accumulation, which tells me we're probably going to get a break out of here. Okay, next one we want to look at real quick in the transportation. This is the Air Freight and Couriers Group. It's an okay. You have a little bit of sideways action over here, but you're starting to get a breakout above these little highs. You got a list of stocks in here. Over the last week, the air freight couriers industry was up 1.5% over the last week. Over the last 4 weeks, it's up 4.25%. So you're getting some action in that thing. First one we'll look at is XPO Logistics. It's a logistics company. It's got a nice trending rising trend line. Some nice, a little bit of accumulation. It looks like you're starting to break out here. You had a point and figure breakout yesterday. Double top on this right here, so you broke that. Possibly you get a little bit of a pullback to where the breakout was, around 55, and then you could maybe buy that thing. Again, I think this thing probably looks a little bit higher. I like that it broke out on good volume, as you can see over here also. So that's one that you might take a look at. Another one that I think is probably going higher. This is called Forward Air Corps, FWRD. You can see, okay, here you had pulled back down to the moving averages, broke above the pivot point. Nice positive divergence on these. Again, you came down to 50 on the 30-day stochastic, moved up. But this is nice accumulation. When you have a stock that's going sideways and basically going nowhere, but you're seeing a little bit of a rising trend, that means they're buying. And generally, when you see that, when it does break out, it's going to be to the upside. Now, if you have this sideways like this and you see the thing coming down like this, that usually is going to tell you on a flat market that you're going to break to the bottom, but you didn't get that. You had the 200-day moving average held a couple times here, and now we have a chance to break out to the top side. So this looks like one that we could probably make a little bit of money. Okay, the last two on the air freight thing. This is FedEx. And you've a little sideways action. I don't like the accumulation thing on here. It turned up a little bit, but you've picked up a lot of momentum here on the momentum indicators recently, and we might get a little bit of a breakout to new highs on this. You had an upgrade with this to neutral from Seaport. It's a brokerage firm. They upgraded it, FedEx, and they also upgraded UPS. But this thing is kind of broke out of this sideways action on good momentum, and we do have a little bit of an uptick on the accumulation distribution. I'd like to see this thing. Maybe if you get a pullback here to below 200, and you see this line go above that this resistance level, FedEx might be one to nibble away at. Seaport also upgraded UPS. Now this is kind of an interesting chart because we're going to look at this on two different time horizons. Okay, you had this great big trend or trading range in here from about 102 to about 109, breaks out, immediately gaps down, comes right back into it, then back and forth. You know, if you're a range trader, you can go in here, you know, buy it down here, short it up here, this type of thing. But you have some decent accumulation, and you look like you're getting a little bit of a breakout over here where you just went above the 100-day and the 200-day moving average. You're kind of sitting on them right there. So at this point you're kind of thinking, well, maybe I want to, you know, I'm going to trade this thing for another trade down to here. Maybe I'm going to short UPS. But if you give it a little bit longer term, this is a 2-year chart. You can see where we bottomed out over here, and then we went up there and made that new high. Now that you come off of that, if you use the Fibonacci retracement levels, you can come down here where it came down, basically kind of retraced about 50% of that whole move up, found support where you'd wanted to find support, and now we've been kind of trading sideways on this 68.2% of the whole move, and it looks like, you know, you've broken above these moving averages. It looks like you're getting a breakout where you take this and you can at least get a trace, retrace that whole move, where you get a move back up to about 118, and we're at 107 now, which is a nice move. And when you look at that accumulation distribution line on the longer term, it looks a little bit better. You know, you're not going to see the thing spiking up like you might on a semiconductor or something like that, but this is a nice steady rise on that. So that would be one that I would look at. Okay, we're going to kind of wrap this thing up. I've gone too long a little bit more, but before I do, I had someone ask me about gold stocks coming in today. We'll open this one last one. Now, this is one in the transports that you don't want to buy. I think if we threw Avis budget group out, maybe we'd be getting a new high in the transports already. But this thing here looks horrible, under distribution. This thing looks like it's going lower. I would not be looking to bottom fish on this thing at all. It's like I said, I think this stock here is probably one of the reasons why transport can't break out. But here's this is GOLD. This is Randgold Resources. You can see this upward trend line. You had a little bit of a breakout here. We're breaking out to about a 7-month high today, and you're gonna have a little bit more resistance up here around 102 on this thing. But gold is taking a run towards the 1300 level. Today we're up over 1% again today at 1295. We talked about gold stocks a little bit a couple weeks ago. We made some money on a trade. We came out of them. I'm looking at them right now. I think you could possibly get a little bit of a short-term trade on gold. What I think is going on right here, though, again, we talked about the ECB meeting this week. Also, you have that the vote again in England. I guess it's this weekend. A lot of funds will hedge to the downside for any little blimps in the market with gold. They don't want to buy the volatility ETFs and stuff to hedge themselves to the downside. So if it get any disruptions in the euro or in England or something like that, and then our FOMC meeting is next week, and if we raise rates, that's not a good environment for gold on a longer term. Now, if they come in and because on the market letter we talk a little bit about, to me it's not a sure thing that we're going to get a rate hike just because the way yields are coming. We're down here at 214, which is on the 10-year Treasury yield, which is where I think we've started November at. And that's not when they're telling you they're raising rates and you're down 50 basis points from when the last rate hike. It's a little bit worrisome. So that and the fact that you have the utilities breaking out to a new high is a little bit of a trouble. But with the utilities and consumer staples, I think that's still just people looking for yield. But I would be a little bit cautious going on a big position in gold right here. I'd like to see what happens over the next 2 weeks. If it continues to go higher because the dollar is going lower, that's good. But I should have put it in here. But if you follow the U.S. dollar, if it starts to strengthen going into the FOMC meeting, that would also cap your gold trades. And here you have the XA. This is the gold and silver index. You're coming up. You're bumping into this 100-day moving average. But if you break above this, I think you could probably get a little bit higher. But then you got to see what happens over the next 2 weeks. if we don't raise rates or something like that, this will continue to go higher. But if FOMC does raise rates, that could be the end of it. Okay, I'm going to go ahead and open this to questions. I see we got one in here already. Got a couple of them coming in. Is this pointer working? It is now. Okay. What's your view on consumer discretionary and stocks? The semiconductors, love them. They go up every day. It seems like you're up again, almost 0.69% today. We can look at some semiconductors going forward. They are overbought in here. My only concern is that I want to see how the momentum indicators with the CTI going negative here in about 3 or 4 weeks. I don't know if I would hold on to what I've got in the semiconductors, but I don't think I'd be taking a big profit in one, like NVIDIA or AMD or something like that, and then flipping into another one. I would hold on to what I've got on the semiconductors. If the gains get too high, you can always buy a put going out 3 or 4 months if you want to hold on to it, just to see if in case the market does pull back. If you've done the triple leveraged CTI call this time, we're back to even for the year. We had a pretty rough start there to the beginning when we were long, when we were bearish, and we closed that position up in February, and we went long again in December. We're up about 11 or 12% on the triple CTI call right now. We'll see what happens here. We'll probably go positive on the whole trade, but we'll see what happens here in 3 or 4 weeks if we can catch up on the broader market with that. All right, we're going to look at MXL. And if you have any more questions after this one, let me know so we can kind of go in here. And I'm going to close down this screen and share the screen on the other side and look at a couple individual stocks. Okay, start. Okay, let's take a look at MXL. Okay, Max Linear, nice looking chart. A little bit of negative divergence over here. Not sure what industry they're in. Let's see. Yeah, coming down here and holding this. As long as it holds this $30 range over here, this looks good. You had a nice pop up here, breakout on good volume. A little bit of negative divergence on here. It's having a good day today. So it looks like you probably break out double top breakout up here around 32 and change. Again, as long as you stay above, let's say 20, I'd say 30 or 29 actually, hold that gap. I think you're in pretty good shape. Again, I don't know what the company does, but let me take a look real quick.
Semiconductor equipment. Come on.
Broadband communications, data center, transport network applications. Yeah, it's in the right sector. It's in to go for the transportation industry. I would be a buyer of this thing. I don't have any problems with that. It looks good. Okay, let's go back to the.
Weaker.
Have another one in here. Semiconductor company. Okay, semiconductor. Now with SQ hitting 52-week highs, any suggestions? Let's take a look at that. Overbought, to say the least, but here's what I like down here. Even though it's overbought, when these things are overbought and they're still spiking up like this on their accumulation, that's a good. This thing stayed up around 95. It's you don't want to chase it, but I would probably buy this on any down days. It looks that strong. Also with Love hitting a 52-week high, of all the airline stocks right now, I like LUV the best. To me, I'm one of the, I guess with Kramer, you look at the buy stocks, the ones that make new highs continue to make new highs. They're there for a reason. And to me, this thing's looks good. Again, you have 1, 2, 3, 4. You've bounced off here 5 times at the 60 3/4 or whatever, 61 level. I think this thing breaks out to higher highs. to consumer discretionary. Consumer discretionary, we've talked about that a lot of times. That's as long as you're in the specialty consumer stocks, you're doing good. I don't care whether it's Foot Locker, Ulta, Home Depot. We had a list of them a while back. I think you're fine on these things. You know, I think it's you're a little bit stretched here, but as long as you're buying, you know, the accumulation here on these things. You don't want to buy the mall stores, but yeah, the Home Depots and the Lowe's and that kind of stocks, the Dunkin' Donuts, whatever, they look good to me. I think you can still keep on in those. Okay, I've gone 45 minutes, and that's I don't like to go too much longer before everybody falls asleep. So I really appreciate you taking some time out of your busy day to join me in this. I hope you got something out of it, and I hope you can make some money. And if you have any questions on individual stocks or anything we talked about, please come back, and I'll try to get them back to you. And next week we may look at some of the biotechs, especially if we get a trade above the 295 to 300 level this week. All right, thanks a lot, everybody.